Hello and welcome. I'm David Robinson, the online editor at The Banker, and today we're going to look at the People's Bank of China's planned digital currency, the e-yuan, and its wider implications. With me to discuss this is Mark Williams, Chief Asia Economist at Capital Economics. Mark, China has made great strides in its bid to develop a central bank digital currency. We know that pilot schemes have been running in a number of Chinese cities and a wider rollout is planned at the Beijing Winter Olympics in 2022. Shall we start with why is China leading the world in the development of a central bank digital currency at the moment, and how far ahead is it?
Well, there are a number of central banks that have got interested in central bank digital currencies over the past few years. And it's primarily because they are seeing this shift that most of us have seen in our societies away from the uses of cash in day-to-day transactions and towards digital payment methods. And that's a concern for central banks, partly because they have a responsibility to have a widely available payments system. But there are also concerns about what it means for policy if a lot of transactions are happening in these private payments systems, also for financial stability. In China, the People's Bank of China are leading the way on this simply because they are further down that road than pretty much any other place. So cash, just over the past decade, has really dropped out of general use. And in particular, in China, there are two private payments providers, so Alipay and WeChat Pay, which now deal with about 2/3 of day-to-day spending by Chinese households. So that really, has taken off very, very fast. The People's Bank has these same concerns that other central banks have. But on top of that, there's another issue, in my view, in China, which is that the leadership in China is always uncomfortable if any private actor has significant power in any sphere, not just finance, not just the economy, anywhere in China, in society. And so the fact that 2/3 of all spending is going through these two private companies is really something that makes the leadership quite nervous. So they've had this crackdown over the past year on the tech giants. And I think that the launch of the central bank digital currency in China really should be seen as part of that, as part of an effort to wrest back public control of the payment system.
Interesting. Mark, can you briefly outline how the digital currency will work and, crucially, whether you think it will succeed?
Well, in terms of how it will work, this is, I think, quite interesting because there's been a lot of speculation about it launching very soon and China being well ahead of the rest of the world. But actually, very few details have been announced on the kind of technical side of things. Exactly how will it operate? So we don't know that much. And that makes me suspect, actually, that a full sort of nationwide launch is probably further away than is generally thought. I think at least a couple of years before we can see it widely used or widely available within China. What we do know is that it will be a two-tier system. So in one tier, the People's Bank will provide ECNY to commercial banks that in the second tier will then pass that on to their customers in the form of digital wallets. And the reason that they're doing this two-tier system is that the People's Bank feels, quite rightly, I think, that the commercial banks are much better placed to manage the relationship with customers. And they're also hoping there's going to be some competition in how these digital wallets operate, so that over time new features are added to it. So that's the sort of structure. In terms of will it succeed? I think the big problem for the People's Bank is that Chinese people already have access to two stable, reliable, and pretty ubiquitous payment systems. So Alipay and WeChat Pay, can be used pretty much everywhere in China, not just in the online world, but in your day-to-day transactions as well. You can buy vegetables in the market using them as well. So in these circumstances, it's really hard to see what is if you call it ECNY wallet, what's that going to offer that people don't already have already? I can't see it personally. So I think that if it's left to the market, that it's not going to take off. It's not really going to go anywhere. But of course, coming back to why I think that they're launching this, they want to get back control of the payment system. So ultimately, I think they're going to make sure it does succeed. And the way that they'll do that, in my view, is that they'll they'll force the ECNY payment system to become the default payment system throughout China. So you'll have to use it.
As China pushes ahead, what do you think the implications for policy will be? And I suppose the million yuan question, can the yuan usurp the dollar and become a global reserve currency over the longer term?
In terms of domestic policy, first of all, the People's Bank has said that it will not offer interest on ECNY balances. So that sort of removes possible monetary policy uses. There's a few interesting things on the fiscal policy side that could be done. If everybody has a wallet that's attached to their identity, then it becomes easier to do transfers, fiscal transfers to people. And there's a lot of speculation about central banks being able to take advantage of what they call the programmable nature of a CBDC. So what that means in practice is that conditions could be set on how some money could be used. So a finance ministry could stick some money in people's accounts, but insist that it has to be spent within the next 3 months. So that would be a useful way of sort of accelerating stimulus. But in China's context, I think that these are all sort of hypotheticals for the future. There's no sign that the ECNY, when it is launched, will incorporate any of these more interesting things. And I strongly suspect that when it's launched, it will effectively look very similar to sort of payment systems that we have right now. It might evolve over time, but those kind of questions are for the future. For the international use of the renminbi, I don't think that the launch of ECNY really changes much on that front. China launched CNH just over a decade ago. So people around the world, if they've wanted to, have been able to trade in renminbi, invest in renminbi, hold renminbi accounts for more than a decade. And the net result is that today about 2% of foreign exchange reserves are in renminbi, 2% of transactions on the SWIFT network, 2% of spot foreign exchange transactions are renminbi. So it really hasn't taken off, and nothing about the launch of ECNY will really change the fundamentals there. That if you want people to hold your currency, they have to be both willing and able to buy and sell your country's assets in large quantities. And China obviously still maintains capital controls. It has relaxed them over the past 10 years, but we saw in 2015-16 that when the financial system came under strain, those capital controls were reimposed. So as long as that remains the case, I think that global investors are going to be wary about holding really significant balances of renminbi assets. And that's going to mean that the renminbi not only doesn't challenge the dollar as a global currency, I think it's unlikely in the next decade that it will even come close to the euro or the yen.
Interesting. Well, Mark, thank you so much for your time today. Central bank digital currencies are only going to grow in importance in the next few years, and it's a trend we will continue following closely at The Banker.